Good morning, good morning. How's everybody today? You guys doing well? So we got a few things to focus our attention on today in the markets. So we're going to do that. We're about 3 minutes outside of 9. So we'll let the rest slowly drizzle in. We can get started very soon. If you have any specific charts you want to take a look at, let me know what they are, and we can definitely take a look at them. Okay? Just post them in the comments and we'll have a look at them. Okay, so how you guys doing? First of all, good day so far. Please hit the like button if you get a chance. When you get a chance, if you can do that, I'd appreciate it. We were looking at Euro Kiwi. I often get asked how can the system be used for taking day trades, and the system is very accurate for taking day trades. And I'll show you an example of that. So we have a daily chart here, okay? And we made contact with this area of demand right here, okay? And when price hits areas of demand on the daily chart, what we can do is slip down to the 1 hour chart and look for trades, okay? And so let's take a look here. So let me show you the trade that was here. So there was an institutional area of supply. Oh, that's a little bit big. Let me do it like this. There was an institutional area of supply right here. Okay? That was a zone where the banks were expected to take that was a supply zone that the banks used to propel price to the downside. Okay? Right here. Came here and dropped. Alright? And so later on, as price was making its way up, they created an area of demand right here. And so here was the entry right there. Your stop would have been below the area of demand. Price dropped into the area of demand and took off. And so your entry would have been just above the zone here, and there's 1 to 1, 2 to 1, 3 to 1, 4 to 1, 5 to 1 to the upside. Okay, so there you have it. There is an excellent example of a day trade taking place using our system. Okay, it's not very difficult. You just have to be patient and wait for those opportunities to come, and then when they're there, they're there. Alright, that was Euro Kiwi. Let's switch back to the daily chart now. Good morning, Matthew. You guys want to take a look at Bitcoin? Bitcoin dropped down to 50. Yeah. Well, on the daily chart, we've known this for quite some time that the daily chart is not good. Okay, the structure is not holding. Demand doesn't hold. Supply doesn't hold. Nothing is holding. So you can't rely on the daily chart for entering into positions. It's just not going to be reliable. How do we come to know the area of demand by banks? Well, that's what we teach at the school. It's a process of going through the charts and locating the bank's supply and demand. A lot of it has to do with understanding that the banks are using algorithms to accumulate positions and to distribute positions. And so if you understand how regular technical analysis is done, you know, the drawing of support and resistance and trend lines, if you understand that that is done, that is taught in books for the main purpose of the bank's algorithms to lure retail traders into taking the opposite side of their trades, then a lot of information is revealed in that manner. Okay. So this is what we have on the daily chart of Bitcoin. So it's not reliable at all, like I was mentioning. We had demand zones removed, supply zones removed, demand, supply, demand. So there's nothing here to hold price. Okay, all of this here, there's nothing here to hold price. I mean, could it hold and then price starts heading up higher? Yeah, I'm sure that's possible. But is it likely? It's not likely. Okay, it's not likely because that's not usually how the markets work. The only time frame that's really holding is the weekly chart. We've had a really nice push to the upside. Okay, and now we have an institutional area of demand right here. So what is this? What am I telling you here? What I'm telling you is that when you're looking at the charts to determine what is the most likely scenario, what is it that we know for a fact? Well, we know for a fact that the daily chart is not holding any structures. So could you base trades off the daily chart? It wouldn't be a good idea. Why? Because there's nothing solid there to base a trade off of. So you jump up one time frame to the weekly, and what do we have? We have an uptrend. We have institutional demand located on the chart. If price comes down into that demand, buying there would be higher probability than buying anywhere where price is up here. Okay, so that's just how it is. If you look at trading any other way, it's, you know, you're gonna have to speculate at some point, because it's speculation, because you're making assumptions that you know what's going to happen as opposed to knowing what has happened and what will likely happen based on what has transpired. I see Ironborn wrote, I am having this issue also. What issue are you having? Was there an issue that you guys are having? Is everything working okay on your end? It seems to be working okay on my end here. So I just wanted to point that out. Okay, be very careful with going long. I mentioned this before. Could it go higher? Yes. But I wouldn't want to engage in Bitcoin and make assumptions that Bitcoin is going to go higher unless this at least was broken out of. You know, this is ranging here. As long as price remains in this range on the daily chart, I wouldn't be interested. Because when price ranging, it's usually a distribution or an accumulation of a position. So if you go to, let's just check it out and see what we find here. If we go into Google, this ranging started beginning of February. Okay, so let's say, let's type it in here, Bitcoin price news, and let's take a look here. Tools, oh, there you go. So beginning of February, okay, to now. Okay, so let's take a look at what the headlines have been saying about Bitcoin. Bitcoin soars nearing 50,000. So we're at about 50,000 right now. Bitcoin price rockets after Elon Musk Tesla reveals it bought 1.5 billion. Yeah, that was a little bit further ago. So let's change this. Past week, Bitcoin price enters bear market. Bitcoin price dives after Musk announces Tesla no longer accepts it. Bitcoin price falls to 50. Bitcoin mining. Why Bitcoin could rocket to a $250,000 price within 5 years. Oh, okay. 250,000 within 5 years. Why not just say a million or 300,000? Legendary investor. Fed warning as crypto price competition. Bitcoin price bounces despite stocks. Okay. So what I'm seeing is Bitcoin price prediction. 3 reasons why nosedived. Okay, so they're explaining why it dropped. Bitcoin price heading towards 250,000 predicts senior hedge fund executive. So another prediction, 250,000. So there seems to be an explanation for why it dropped. Bitcoin pullback risk rises as whales resume selling. Alright, well, there seems to be a lot of explanation for the drops through here. Could it be that the banks are taking profits on long positions from down here and lower, which is causing the drops? And they're trying to explain these drops as being, you know, Elon Musk going on SNL, dropping the use of Bitcoin to purchase vehicles as explanations for these drops. But then we have other analysts coming out and predicting $250,000. So I don't know about that. I think that's extremely risky. I wouldn't be getting involved in that one. Looks like they're setting something up. What it is, couldn't tell you. All I know is if this doesn't create a new foundation and build out of this ranging on the daily chart, it's going to head lower. Down to 35. Alright, that's what I see. What if it goes back to daily demand? Would it be good, or could they use that area to lure retail traders? If it comes down to daily demand, well, no daily demand zone has been holding. No daily demand zone has been holding. So why would I pick any type of demand zone on the daily chart as a zone that should hold? I would not do that because the chart is telling me the daily chart is unreliable. I got an important question. Let's see. Important question. Why you think that supply and demand is working on cross pairs? According to COT data, which are make only for US pairs, currency futures, so other pairs are just secondary movement. Thanks. Why do you think supply and demand is working on cross pairs? Well, supply and demand works with any chart with candles. Any chart. Because the cross pairs are being traded by the banks. They're creating demand, they're creating supply. So it's the same principle. Using the COT data, you can determine, what currencies are likely to get stronger and weaker. The COT data is also extremely important to know when there are times in the market that we are waiting for live trades to take place by the banks to determine what direction price is going to take. That's when we would look at the COT data, like Bitcoin. It's stuck in a range, like I was mentioning. Is it going to break out of the range or drop? We would look at the COT data and see what kind of movements are they making with their positions. That would give us a good idea. Okay. Okay, let's take a look here. Aussie Yen. Alright, you want to take a look at Aussie Yen? We can do that. Aussie Yen is still just sitting sideways. We had a 4-hour target here that got hit just within a pip or two. Pretty incredible how that happened. And so we also have higher targets on the charts. We're expecting price to head higher. So on the monthly chart, we have price expected to move higher. We got demand down here, but price is like in the middle of the ocean right now. Alright, it's like when a boat leaves the dock and it's heading out into the ocean. When it leaves the dock, it's all fueled, it turns on the engines, and it goes out, and it starts heading out. But then sometimes price is like in the middle of the ocean and it's shut off its engines. When it shuts off its engines, this is what we see. These type of candles, basing candles. So price just sits sideways, and now it depends on when the engines are going to be turned back on, what direction they're going to head in. Are they going to head north, or are they going to turn on their engines and head south? So when price is in a situation like that, it's difficult to tell because momentum has been dying down. When momentum dies down, how do you know what direction it's going to head into? It can head in either direction. So choosing a direction to trade, this pair right now is not high odds. Okay, it's just not high odds. And when we look at the Aussie, it's just doing a bunch of nothing sideways on the monthly chart as well, right? So until it breaks out of that range with momentum, how do you know what direction it's going to head into, right? This is like Bitcoin. See the ranging here? Until it breaks out of this range, how do you know what direction it's going to head into? And that's the point I'm making. You don't want to trade when it's in a range. And I know there's a lot of trading styles that teach trading in a range. The only reason why they do that is because they figure if there's been an up and a down, that's happened many times, then that increases the possibility that it's going to continue happening, and then you could judge entries and exits based on that ranging. But I'm telling you right now, that's a very flawed system. It's very flawed. Because if you understood the nature of ranging and what is happening, you would know that it's very dangerous to do that, because ranging can break out at any point, and when it does, it's going to break out with significant momentum. And that's why many traders get caught. Because when that momentum comes into the market and it breaks out of that range, boy, if you're short and it goes higher, you're in trouble. And if you don't know in what context price is playing out in, then you don't know where price is going to head towards. If you don't know where price is going to head towards, how do you know if you should get out of your position and take all your losses or hedge? So I would never hedge if I was a regular retail trader. Never. Because hedging will wipe out your account. Why? Because if you don't know where price is going to go, why on earth would you ever hedge a position? You're just asking for trouble, because you don't know where price is going to go. So why would you hedge? I hedge in my positions if my initial analysis was incorrect, or many times what I'll do is I'll enter into a position before the markets are clear, before the institutions are showing me where price is going to go. So I'll make a determination. I'll say, okay, I think the risk is pretty decent. I'll start getting into a position here. And if it goes against me, that's okay, because I know what my plan B is. I know if I was wrong there and it's going to do something else, I know what it's going to do. I know with some degree of certainty what it's going to do. And so as that certainty builds up, I will increase my position sizes to favor that direction that price is expected to go in. So with Aussie, um, it's not a good time to trade Aussie. It's not very clear. Okay, it's not very clear. Break out of that ranging, great. But we recently were looking at this weekly area of supply here. It's gotten removed. That's good, but look what's happening right after. So there's no sustained momentum here. So we put that one on the back burner and wait for that momentum to kick in. Let me see. Hi Kev, could you look at Euro Kiwi? Yeah, we just did earlier. Please add BNB USDT if possible. What is that? BNB. Let's take a quick look at that. BNB USDT. Binance coins. Huh. Binance coins. BNB USDT. Okay. Let's pick one of those and see. Oh, another coin. It's all the same stuff. All these coins are all the same stuff. Yeah, it's had a nice rally. Sure, okay, good. Did you catch it? A lot of people look at this chart and say, yeah, but it was like, $100 not long ago. Now it's 600. Yeah, okay. Do you think you would have been able to hold 3 months something as volatile as this? Probably not. Most people wouldn't be able to do that. So it's nice to look afterwards, but you wouldn't know. Look at this initial rally up to here, 320. You got in and it dropped to 200. You know what it's like to see something lose by that percentage? That's 1/3. That's 1/3 of your investment. That's nuts. If you're investing $200, okay, great. You know, but if you're investing 100,000, 200,000, 500,000, losing 1/3 in a matter of days, you'll have a heart attack. Right? Your emotions will be stirred so badly that you won't be able to control yourself. So I wouldn't touch this. What I can tell you is that you got demand here in the 480 range on the weekly chart. If price was to get into this area, then yeah, very good chance that it starts heading higher. But you'd have to risk below here. You have to put your stop loss below there. That's your cutoff point. If you got into the 480s, 500 range, you'd have to have your stop loss in the 420s. And if it gets hit, it gets hit, and that's it. You take the loss and you walk away. But that would be the better odds of trading that. As for the daily chart looks like a mess, just like Bitcoin. Okay. And it's currently sitting inside demand right here. That's what's taking place right here. That's why it's moving to the upside here, because it's sitting inside some demand here on the daily chart. Okay, but other than that, I don't see anything decent there. Pound US dollar. Ali, how's it going, Ali? Pound US dollar, let's take a look. So this one is also another one that's not highly predictable. Okay, let's take a look here. Look at the daily chart. So you see a common theme that I'm pointing out here? The common theme is that we're getting a lot of ranging on daily charts, right? And so what does that tell you? A lot of ranging. Is there a definite drive to push price in a certain direction? No, there's not. And we went through some of the caught data yesterday, on yesterday's session. If you haven't watched that one, you should have a look. We broke it down, looked at the caught data to determine what was happening with the banks. And did we not see in the data, a lack of strong momentum to push these markets? We did. So getting involved in this market is not the greatest time. And I've mentioned this to my students that when the momentum is there, I'll notify them. Okay? Until that time comes, we can't make moves. Okay? Because it's not high odds. It's not a high odds scenario to be making moves. Okay? So let me go quickly and show you what we were looking at. Okay, where are you? Here you are. Let me open this up. So this was gold, right? And I just want you to focus on this here, this area here. Okay, long and short percentage. It's somewhat blue, neutral. All right. Next one is a little bit green, but that's oil. Oil is always green. US dollar went from red to blue, right? Neutral. Aussie has been somewhat neutral for a long time, 51%. US CAD, that's strong, bearish. That's the one that we made money on shorting. US Swiss went from bearish to neutral. Euro, very bullish to less bullish. Pound, sitting at 62%, but no strong momentum. US dollar Japanese yen, bearish to bullish to neutral. And Kiwi, bullish to neutral to a little bit of bullish. So you see, there's a very there's a lack of momentum in these markets, which makes it not ideal to trade. Okay, I want momentum. I want momentum in these markets. All right, so that's pound, New Zealand US dollar, the Kiwi. Yeah, we had a little bit of momentum building up at one point. It's contacted supply, reversing to the downside. So again, it's the same thing. I shorted a day trade here, the Kiwi, and closed here and took profits. That was a nice one, but that was the initial move we were expecting. Once that took place, that was it. And now it's ranging. So it's going to stay in this range for a while until it breaks out. So is it going to break up to the upside or to the downside? You know, I would say it's there's a better chance that it breaks to the upside than to the downside. But I would rather it wait. I would rather wait for it to actually make that move than to start getting into positions now. That's just how I feel about that. So it's not ideal. Okay, I think there's a good trade here, trading opportunity with in terms of the Aussie CAD. Okay, because we see how the Aussie sitting in a range. Any CAD pair will be good to trade, decent to trade, I should say. Not ideal, but remember, the US CAD is the one chart that is free flowing. Okay, this one's free flowing to the downside. It's got nothing to stop price from dropping. Yes, we can get short-term rallies to the upside, but longer term we can definitely get this to drop. So that means a strong Canadian dollar is what we're expecting, right? So when we were looking at euro, we saw ranging, pound ranging, right? Aussie ranging. Okay, the euro has more strength in it than the pound and the Aussie. So Aussie CAD, we could expect the Aussie to do nothing and the CAD to get stronger. So what would happen with the Aussie CAD if the Aussie did nothing in terms of strength or weakness and the Canadian dollar got stronger? We'd expect it to drop. So we've already seen the initial push to the downside, Now we have some demand being contacted, but over time we can see this definitely drop. Pound CAD. So if the pound continues to sit sideways, then we could see some more momentum to the downside with this one. Although I don't like this chart as much because we have this major area of demand that's been contacted a few times and we're sitting there again. Let's see EuroCAD. Yeah, it looks like there's a possibility for this one to drop even further. But the euro is starting to build up that momentum to the upside. So euro strong, CAD strong, that would make this currency kind of sit sideways. Hello, how many trades do you take every week on average? Well, you'd only be able to take the amount of trades that are available for you. And I'm a swing trader. So if the market is ranging, I don't trade. That's how I trade. If you're a day trader and you find opportunities on the lower time frames, then you could trade many times. Here is a trade off of a daily area of supply. This is a trade signal here to go down with nothing blocking. Let's take a look if there was a 1 hour momentum shift off of that one. Let's see. I haven't checked this one yet. So here we have that area of supply here, and it came up and contacted here. So what we'd be looking for is an entry on a 1 hour chart to take this to the downside. So the first thing I see is we have price action. Let me use my brown. So this is how you would day trade this, alright? So you see this price action heading down, right? Okay. So as price was leaving this area here, the institutions were creating supply. Okay. And it was obviously with the intentions of reversing price back up to the area of supply to fill that supply and cause price to go lower. So what happened here is if you take a trend line and do that, okay, we have price coming down like this. After it created supply, and now let's take a look here. You see how price comes up to this trend line right there? You think retail traders had that trend line drawn there as well? It's very likely, right? Well, you see the type of price action that took place right here, how price needed to provide a really strong move to the upside to go through that trend line. That's very telling. Okay, that's usually the banks coming in and filling in massive amounts of demand, eating up all the supply there from retail traders. That's typically what's taking place. And then it comes up here and then reverses all the way back down to the trend line, holds it, and then continues higher. Okay, so what I am seeing here is the banks were buying in this area. That's where the banks were buying to push price up to get it into supply right up here. Okay, so the banks had orders in the markets to buy there. Now, once they contact this area up here, they're starting to fill in supply to push price lower. So as price is coming down, it contacts their area of demand that they had previously created. That demand pushes price up to about here, and then they drop price hard, creating supply right here. And so price drops through, comes lower, comes up, contacts their supply, there's your 1 hour entry to get in short. Stop loss above the zone, entry below, and there you go. You have your 1, 2, 3, 4, probably even 5 to 1 trade there. So it depends what time frame you're trading. If all I did was trade, okay, and didn't teach and make lessons and do sessions and have a family and have 2 kids and have other responsibilities, social responsibilities, economic responsibilities, if I didn't have those and all I did was sit and trade, then yeah, I would take day trades. I would take day trades, and I could find a lot more trades than I do, but I have a life outside of trading the markets, and that has to do with running the school and teaching and my family and all that other stuff. And then I would be able to find more. But you know what? I'm very happy with swing trading. I don't like sitting in front of the computer 24/7 looking for trades. That's just not my style. That's just not what I like to do. But are they available? Yeah, they're available if you look for them, for sure. Okay? The system that we teach, you can narrow down to any time frame. It doesn't make a difference. When I'm trading, I'm looking at monthly, weekly, daily, and 4 hour. That's my main focus, is those time frames. But what I'm doing on these time frames, you can switch it to be, a 4 hour, 1 hour, a 15 minute, and 5 minute chart if you wanted to. I think for day trading, the ideal is you start the lowest at your 15 minute. Your next time frame is 1 hour. One up from there is the 4 hour, and the highest would be daily. That's what I would say. But all the time frames. I mean, if you were just a day trader, the first thing you'd have to know is what to expect from the higher time frames. So let's say you just want to day trade and you joined the school, then you would be looking at our observation journals just for direction on the higher time frames. Because once you know the direction on the higher time frames, then you can narrow it down to the lower time frames and look for your entries. Look for those daily zones that you can eventually look for 1 hour trades off of, or look for your 4 hour zones that you could be looking for 15 minute trades off of. Okay. So Euro CAD, we are talking about potential strength in the CAD. The only problem is that when we looked at the US CAD, there's a possibility of a little bit of a retrace happening right now, right? But let's say we were looking at the US CAD and we were seeing that momentum was just starting to build to the downside, okay? Let's just say that. And let's say the euro wasn't doing anything, just sitting sideways. Then we could safely expect that after this area of supply has been contacted on the 4 hour chart, that we'd expect a drop. So let's say that this is what our expectations were. So we would drop this chart down to a 15-minute chart, and we would look for an entry. Okay? And so let's take a look at what we got here. Yeah, I see something here. I see something here. So let me point out what I spotted here. Okay? Here's institutional supply. All right? Here is institutional demand, and here is institutional supply. So price has already contacted the institutional supply here, and look what is happening with price. All right, so that's already a 2-to-1 trade there. I see a lot of day traders, they get in for that quick 1-to-1, 2-to-1 sometimes if they're lucky. But if you're timing the markets properly and you know that direction is going to be to the downside, for instance, like what I was mentioning, if you were looking at the US CAD and that chart was definitely telling you that price was going to drop with momentum, and it was going to drop for a certain distance, and the euro was going to just hold and do nothing, then you wouldn't be just timing an entry to get a 1-to-1. You'd be timing this to get a significant drop. Okay, so in a case like this, let's take a look here. use my risk to reward tool. So that would be 3 to 1. Okay, like that. That would be 3 to 1. And that's your 6 to 1. So you could, and another thing that we do is a very great way of trading is you want to break down positions into thirds. Okay, this is what we do a lot of times, not all the time, but depending on the type of trade, we break down positions into thirds. Okay, let me fix that. That should actually look like this, like that. There you go. That's 8 to 1. Sorry. Okay, 8 to 1. Let me see. 1, 2, 3, 4, 5, 6, 7 to 1. Sorry. So what we like to do a lot is we'll break down a trade into thirds. So if we have this position and we want to open up 9, okay, 9 lots, whatever you want to call it, we split that into 3 threes. So all the stop losses are here, entry here, and at 2 to 1 we would have 1/3 of that position close. Why? Because once you hit that 1/3 mark, then the trade is for free, all right? Because if price was to head up and hit the stop loss, you'd break even. So you just leave your position. You leave the stop loss there. You leave it as is, and you don't touch it. And then you have your targets lower, and you ride your rest of the 2/3 of your position to the downside. So that is a technique that you could use in something like that. Okay, so is there trades? Yeah, I could take trades every day. If that's all I wanted to do was take trades, I would just be spotting them just like I'm showing you right now. I'd be doing the analysis, picking what direction price is likely going to head in, and then finding supply or demand that's going to facilitate those moves on the lower time frames, and then narrowing it down to lower time frames and looking for entries. It's that simple. But I spend my days updating the school website, updating the journals, editing videos, doing classroom sessions, doing these sessions with you, spending time with my family, taking care of my property. Okay, I got 38 acres up in the forest, you know, with my property, and I got many gardens that I have to take care of, and maintenance on my property. So I've got a lot of other things besides just sitting around, right? I got many responsibilities. So, but if I had the time and all I did was trade, I would be definitely trading the lower time frames because there are many opportunities. Okay, so don't make a judgment on how good a system is based on how many trades I take. All right, because that wouldn't make any sense. Base it on what you're capable of. The system works, period. It's been working for many years. And it's the reason why we built the school, was to teach people. And that's why we built the school to the size that we have, based on word of mouth, because people have joined and they've seen with their own eyes that the system works time and time again, over and over again. So what is the criteria for entry here for day trading? Yeah, so I just pointed that out. Sarif, be patient. He's been explaining it the whole time, but if you're in a rush to make Lambo millions, then good luck. Well, yeah, that's the problem with most people. They want the quick entries, quick day trade, make big bucks so they can get that Lambo. All right. So what we teach is a system of locating trades based on how the banks are moving price. Okay, determining what's the next move that price is going to make based on what the institutions are doing with price. Following along how price is moving, where they're creating their supply and demand, where's the momentum, and where are the next likely areas where price is going to move to. And then just knowing what time frame to break it down into to locate those trades. That's basically how the system works. Okay, there really is nothing else like it, and you have to come and see it for yourself, see it in action to know. So we're at the 42-minute mark, so we're doing well. If you guys can hit the like button, I would really appreciate that. I'm not seeing it refresh on my end, so I really don't know how many of you have given likes, but if you have been, I appreciate it. Uh, I'll look at one more chart if you guys want me to. We looked at a bunch. Dixie CAD Yen is one that we'll do the CAD Yen. This is one that I was doing some more detailed analysis on yesterday. We have a chart trade signal on this one that is in play for a move higher. We got targets a little bit higher. This one's looking good. Over time, this can go a lot higher. Okay, we have weekly targets that are just about to be hit that we've put in since price was down here. But over time, we could definitely see this heading higher. CAD yen. Okay, with the strength of the CAD, the strength of the CAD. And the yen, U.S. dollar, Japanese yen, when you look at it, it's really been stuck in a range. So we remember what I was talking about. When you have a currency that you know is likely going to get stronger or weaker, and the other one is in a range, you trade the pair. You trade that cross pair. That's how you build the odds of something happening. Okay, so CAD yen looks good, longer term to the upside, shorter term to the upside, but then we can get some pullback. But longer term, we are definitely seeing this go higher. Take a scalp trade before you leave? No, why would I want to do that? I don't scalp the markets. I enter in nice and slowly when the market presents opportunity for me, and I build my positions as large as I possibly can to take advantage. Okay, I shorted US CAD at 125. Okay, and I closed it at 122. That's where I started opening up positions, and as it started playing out in the way that I knew it was going to, I kept on adding to my winner, adding bigger and bigger and bigger and bigger position until my targets got hit, and I made a very good return there. And I did this all before it actually happened. I posted all the analysis, my entries, my analysis, why it was going to do what it was going to do. Everything was laid out. So what day traders are trying to make in little scalps here and there, win some, lose some, win some, lose some, I'm like finding high probability trades. I have no stress. I get into my position slowly, build my position large. I get in with small risk, build my position large as it starts to play out in my favor, and then it moves to my targets. And all I have to do is be patient, and I make a great return. That's all I have to do. So why would I want to scalp? Scalping is not, for me. Okay? It's not for me to trade in that fashion. I like to do my analysis, get into trades when it's high probability, wait, build up the position, take my profits, and sit on the sidelines until the next opportunity comes by. All right. So so that's it. If you have any questions, I will take them. Otherwise, I'll let you go. That's another good session that we've completed for today, Thursday, and then we'll do another one tomorrow morning. Yeah. Jason, there are a lot of day trading strats I have learned at the school. A lot of day trading opportunities, yeah. And it's the same thing. It's the same concept. We're always looking for the same thing when it comes to those day trades, right? It's either one of two things that are going to happen. And depending on what the institutions create on the charts, because it's the banks that are creating the charts, right? Whatever formation of candles they're creating, they basically are telling us what we should be looking for. So that's how it is. Alright, ladies and gents, so I guess that's it. If you don't have any questions, I will let you guys go. I hope you guys enjoyed the rest of your day. And if you do have any pairs that you'd like to look at, let me know what they are. leave them in the comments section. And next time we have our session tomorrow, I'll definitely have a look and try to help you out with that. All right. So enjoy, take care, and